I'd like to welcome everyone to the Corporate Renewable PPA Forum's Market and Policy Update. I hope you can hear me. And please feel free to use chat to send any messages. You're all on mute unless otherwise specified. So the chat window will be open for you, and you can check that now if you would like to. And through the presentation, we'll be using chat to ask questions to the speakers. We have a very modest objective today for this webinar, which is to update the value chain or people from the value chain who are unable to keep track of day-to-day changes in the Indian corporate renewable PPA market. And this is especially for corporate customers who are considering either adopting renewable power through renewable PPAs in India for the first time, or perhaps trying to scale up what they've already done through initial pilots. So that's the idea for today, and that's our modest kind of objective for the day. We have two excellent speakers, Andrew Hines, who is co-founder with CleanMax Solar, and Dipjay, who's representing CLP India. So they'll take us through the topic of the day. Andrew will talk about what's changed in the market since our last report came out. So whatever has happened over 2018. And Dipjay will talk about the policy aspects and regulatory aspects which are changing and which need to be kind of kept in mind when we are planning as a value chain either to adopt or to deploy renewable through corporate PPAs in India. Just very quickly on the World Business Council for Sustainable Development, we are a CEO-led organization of about 200 of the world's largest companies, and our mission is to accelerate the transition to sustainable world and making sure that sustainable businesses are more successful businesses. So CEOs of these companies come together once a year and decide on things that they want to work on together to make sure that their businesses are getting more sustainable every year. Based on those discussions between the CEOs and the work which happens through the year, we have divided what we do into 6 program areas, as you can see on the slides right now. The renewable project or the rescale project sits under the climate and energy project, and other projects running in India include water, which sits under food, land and water, and RE mobility, which is our focused project on electric mobility adoption in India, which sits under cities and mobility. The ambition for the rescale project is that we want to see that renewable energy is reliable and competitive, and it reaches 3,500 gigawatts or 3.5 terawatts of deployed capacity by 2025. And leading companies who are present in the renewable value chain are collaborating to get there and to ensure that the transition is accelerated through this work and everything else that happens through collaborations across different platforms in India, but also globally. The India work, so the Rescale project has various topic deep dives and country deep dives. You can find out more on our website. But the India deep dive for this project basically is called India Corporate Renewable PPA Forum. It brings together 28 companies from the value chain who came together across or through 2017-18 to deliberate on various market and policy happenings within the country. And through that work, we were able to produce an adoption guide or a guide to help accelerate corporate procurement of renewable energy in India. The download link is shown here. You can also go to our website, wbcsd.org, to find this report and download. Just to set the context for this webinar, we came out with this report as a group of companies from the value chain. And we thought that as a group, because WBCSD represents companies and our sphere of influence is largely on companies, but most of the urgent action which is required to accelerate deployment is on policy, which we are letting some of our partners such as CII and others who are also on this call take a lead on. We will be focusing on making sure that corporate customers who either adopted through pilots and want to scale up, but also other corporate customers who are looking to deploy renewable energy in India get the right kind of updates and information for them to be able to make the right decisions. So that's the overall objective of the PPA forum going forward, and we'll be doing these updates. So just to kind of reiterate, antitrust compliance guidelines apply to this webinar. So please avoid discussing pricing, bid strategies, capacity additions, customers, or any other sensitive decisions. Also avoid using this platform for business development or marketing. Again, just to reiterate, we'll have question and answers, which we'll go through with the speakers today. Please feel free to send your questions through the chat messages, which I'll be taking up with speakers after their presentations. So with that, I'll hand over to Andrew. Andrew, if you want to just kind of take us through the market trends and outlook for 2019. And if you're on mute, you can unmute yourself, and please take it forward from there.
Thanks, Jasmeet, and thanks for having me. It's a pleasure to be here. So as Jasmeet mentioned, I'm one of the founders of CleanMax Solar, which is a B2B solar developer. I'm just going to quickly take us through some trends which we're seeing in 2018-19, and also look a little bit at the underlying reasons behind those trends. Sorry, I'm trying to go to the next slide. Yeah, there we go. So 2018 was actually a little bit of a slowdown for the solar and wind industries as a whole, where we can see volumes, capacity additions falling off a little bit from 2017. There were a few reasons behind that. GST coming in 2017, as well as uncertainty around safeguard duty and anti-dumping duty, and then eventual application of safeguard duty, all led to delay of some of the projects which were being executed, led to a bit of a slowdown in 2018. I will say that, you know, if you look at projections for 2019, I think it was more a question of delaying projects or sort of a temporary slowdown, as most people are expecting 2019 to be another growth year. But the slowdown in 2018 overall contrasts with the trend that we see in the corporate segment, where 2018 was actually a banner year for private PPAs. And so on the left side of the screen here, we show numbers both for the rooftop segment as well as open access segment. Rooftop, you can see very consistent growth year over year, continuing through 2018. Open access, you can see that 2018 was a very big year for solar. And I think equally importantly, in 2018, we can see a wide range of corporate buyers of renewable energy. I've given some names here on the right side. These are mostly open access announcements, which are in the public domain. And we can see, you know, a good range of IT companies, automotive manufacturers, other manufacturers, airports, and so on. And I think we can see that the trend towards larger volumes in terms of renewable energy procurement is also broadened to include most sectors as well. So that's also consistent with the global trend of increased volumes in terms of corporate procurement. 2018 was also a very big year internationally, led by the US, which was the number one corporate PPA market. India was actually the second largest market in terms of corporate PPA volume in 2018. Now, if we think about what are the key drivers behind this trend, and I think this applies equally in India as well as globally, I think there are broadly two trends here. One, of course, is sustainability. And we can see more and more corporates signing on to formal pledges like RE100, as well as other similar pledges. And I think more importantly, we're seeing corporates become quite serious about their pursuit of those targets. So anecdotally, I can say a lot of clients which earlier had signed on or had made some sort of formal pledge towards moving towards renewables, actually in the last year or so getting into the implementation phase and trying to make incremental movements towards more and more renewable energy. The second factor, of course, or driver is the economics. And today, or looking back at the last year, in most large states of India, the economics of solar power are quite favorable. I've just chosen a handful of states here and given some representative numbers. The industrial grid tariffs are anywhere in the range of 6.5 to 7.5 rupees per kilowatt hour. And if we look at the landed cost of solar power in each of these states, it's anywhere from 20 to 25% lower than the grid tariff under a long-term PPA. So it's easy to see why corporates are, see an economic rationale for adopting renewable energy. And I think this economic proposition is perhaps stronger in India than in most markets around the world. Within the different options which corporates have in adopting renewable energy, one key decision, is the CapEx model versus the OpEx model. CapEx model simply meaning that the customer is investing in the asset themselves. OpEx model means a PPA or getting into a long-term contract with a developer who then incurs the CapEx and owns the project. Now, we've been seeing corporates adopting the OpEx model increasingly over the years, and I think the value proposition for them is again fairly simple. One, of course, is that they avoid CapEx, and particularly for corporates, are avoiding CapEx in a non-core asset. They're not power companies by and large, and they're not interested in investing capital, into businesses which are not part of the core business. Secondly, it's low risk because they're not investing in equipment or in technology themselves. Most of the risk is actually transferred to the developer, whether it's the macroeconomic risk, regulatory risk, technical risk, and so on. Most of that is passed to the developer. And thirdly, it's what we call an outcome-based procurement. And what we mean by that is that what corporates are really interested in buying is power, not solar panels or wind turbines or what have you. So a PPA offers an opportunity for them to actually directly purchase what it is that they need, which is power, as opposed to having to make an investment into an asset which then generates the power. So for that reason, over the years, we've been seeing a larger and larger share of OpEx model projects within solar power. The data here is shown for rooftop solar, where there's a good volume of both CapEx and OpEx projects which happen. The columns here are the capacity additions in megawatts in rooftop, and the line shows the percentage of the rooftop market, which is in the OpEx model. So we can see the OpEx model growing from very negligible percentage in 2012 to 14, growing up to around 40% in 2018. And we expect that trend to continue. Sorry, it's taking a minute to change between slides. Yeah, and again, another decision which corporates face is between rooftop solar and open access. And I think both of these models are fairly attractive to corporates. Rooftop solar often offers the optimal unit economics. Sorry, the slides are jumping around for some reason, but I'll just continue. So the rooftop solar often offers optimal unit economics because there are no grid charges involved in buying power from a rooftop project. However, the main constraint with rooftop solar is capacity. And so typically a corporate consumer, whether it's an industrial or a commercial consumer, will max out in terms of the power which they can source from rooftop solar. And the percentage they can source from rooftop, it depends a lot on what type of facility it is. It could be as low as say 1% for a data center, which is has very intensive power consumption. It could be as high as say 25% in something like a college, which has a fairly large roof and not a lot of power consumption. But it's almost always going to be a minority of the power consumption. Whereas in open access, that's not a constraint. There may be other regulatory constraints in terms of sourcing power, but typically if someone wants to move towards sourcing a majority of their consumption from renewables, then open access is where they need to go. Of course, customers can also do corporates can also do a combination of rooftop and open access. There we go. Sorry. And finally, one trend which we're starting to see, and I think likely to see going forward, is that within open access, there were some state policies which made third-party open access fairly attractive. Third-party open access is just a bilateral contract between a developer or a generator and a consumer. But in general, in open access, third-party transactions like that will attract cross-subsidy surcharge, which can be anywhere in the range of 1 to 2 rupees per kilowatt hour. And so looking at optimizing the economics for open access, a group captive structure is going to offer the best economics. And a group captive structure, for those who aren't familiar, just means that the end consumer invests 26% equity in the project. And again, just taking a handful of states here with some representative numbers, because of cross-subsidy surcharge being imposed on third-party open access contracts, the third-party open access might be marginally attractive relative to grid electricity prices, but group captive offers a significant benefit below that. So we're likely to see a lot of corporates moving in that direction in the future. And if we look here at the states where regulations are conducive, the orange highlighted states here are ones where rooftop solar is cost effective, and of course that covers almost the entire country. The green icon here shows states which have group captive solar and in some cases wind regulations in place. So if you can see here that all the major states in India, barring 2 or 3, both options are available, and so we're expecting to see widespread adoption in all of these states. And I think I'll wrap it up here and turn it over to Jasmeet.
Thank you, Andrew. We'll take a couple of questions. So some of the questions that we've received on chat, I think Deepak is asking from WRI if developers are mostly advising clients to go for group captive. I think this question has been answered, but the question kind of details into that may be happening because open access charges are kind of very volatile in nature. Is that something you concur with, Andrew? And is there something that you want to kind of add on to that, what you've just said in terms of group captive being the most preferred model in the current scenario?
Sure. I think in general, the answer to that question is going to be facility specific and state specific for any client. And corporates may have different views about what kind of contracts they're comfortable to get into. But what I would say is that if a corporate is interested to source the majority of their power consumption from renewable energy, it's hard to avoid group captive, particularly if they're not willing to pay a premium for the power. So that's why we see that as an important trend.
Another question from Anand Marathe is there any are there any examples of interstate open access? Is that something which is working, can work in the future? So just your thoughts on interstate open access and where we are with respect to that.
We have not seen many examples at all of that, and I think the reason today is just that it may be theoretically feasible, but very complex to actually complete a transaction like that. And particularly for the volume of power which most corporates are looking to source, I don't think it's a practical solution today. I think with some regulatory changes that could change in the future, but I don't think that's a realistic option in the next couple of years.
And then we have, before I go to other questions from the audience, I just wanted to kind of ask you, in one of your slides, you showed that the overall capacity in India over the last year because of GST and anti-dumping kind of stagnated or even went down, but open access really grew very fast. So A, what were the reasons behind it? Are there any particular states which led that trend? And who basically took on that risk of higher costs due to anti-dumping duty, for example, and how was the contract structured, and how did the negotiation between developers and corporate customers play out in that time of uncertainty?
Sure. Um, so in terms of the 2018 numbers, Karnataka was a very big part of that volume because, and really the reason for that is that Karnataka had a policy which covered projects commissioning up to 31st March 2018. So there was a very strong incentives for developers and customers to get into contracts before that. And so what happened in Karnataka is, I think, despite whatever uncertainty was there, particularly in terms of safeguard duty, there was a very compelling reason to get the projects up in time. Whereas, if it were a project where if you didn't have that kind of policy deadline impending, then there would be we would have seen some of those projects getting delayed. In terms of how those risks were shared, I think that's something which all of that risk sharing is something which always is sort of individually negotiated, and depending on when the PPAs were signed, also would have been negotiated differently. So I think some amount of risk would have been shared by both sides. But actually, particularly in Karnataka, the safeguard duty was actually imposed, not until end of July once those projects were all up. So actually, there wasn't really an impact on the projects, but there was an uncertainty which led to some trepidation in getting into contracts earlier.
Now, given that the open access waivers are withdrawn for new projects, do you think that we can replicate the numbers that we achieved in 2018 also in 2019?
It's a good question. I think time will tell. I do think we won't see the numbers like that in third-party open access. But what we are seeing is that the majority of that volume actually was in a single state last year. Whereas now, if you look at the market for 2019 in terms of corporate PPAs, that capacity which does come up is likely to be spread across several states. So, and the rooftop volume, which is not really dependent on regulation, I think will continue to grow at between 50 and 100% year on year. And on the open access side of things, I think I won't give any concrete predictions for what the number will be in 2019, but I do think we'll see some amounts of capacity coming up in multiple states, which shouldn't be too far off from the 2018 number. And I think there's enough underlying demand for that volume from corporates and enough regulations in place across states that whether it's the number in 2019 is higher or lower, I think the next sort of 3-4 year trend will still be upwards.
We do have, as you, a lot of corporate customers on the call right now. What is it that you think is the key concern most of the corporate customers who've not had their first pilots have? And are those concerns justified? So what are the kind of key questions some of these customers ask you in your first meetings as a developer, and for example, with regards to open access charges and how they would change over the years? What's the risk profile, right? So how real are these risks that some of these customers are asking, who are kind of still looking to venture into procuring more renewable power? And what is the kind of answer that a developer would give them in a non-biased manner?
Sure. So I think the answer to that is that there are, yes, I think consumers of power they do ask questions, and rightly so, about the regulatory risks. Now, regulatory risks, I think, could include a number of things. One could be just the risk that the project itself doesn't get off the ground, or that the government approvals for the project aren't granted. And of course, a longer term risk would be around the open access charges and what's likely to happen in the future, and other charges would change. I think, the answer to that is a little bit state specific. I think what I would suggest to corporates looking to source power is to ask all those questions and then sort of put it into the context of the long-term agreement which they're looking to get into. and probably look at a few different scenarios. So, you could have a scenario where the current regulations remain in place, for 10 or 20 years. But of course, you could also have a sort of a downside scenario where, some of the concessions which are there for renewable energy today start to go away. And it's worth looking in that scenario. Do we still see, is the consumer still going to see savings under the contract in the longer term? And I think, at least in the states where we operate, what we see is that even in a sort of reasonable downside scenario, where you can see some concessions going away, yes, it does eat into the consumer savings to some extent, but you still see, customers are still in the money, right? They're still, if at the beginning of the contract, you're looking at a 35% savings, and in a downside scenario, that comes down to say 20%. That doesn't mean you shouldn't get into the contract. It just means, you should sort of be mindful of the possibility that those things are going to change in the future.
Okay, and in one of your slides, you listed the key drivers as sustainability and economics. Mm-hmm. Is there a sense that you have where you would say that one weighs over the other, or is it the same for most customers who look at sustainability as well as economics, or do you think most customers now are looking more at economics than sustainability? So where are we on the sustainability versus economics being key drivers, and how do they stand with respect to each other?
Right. See, I think economics, for any company, economics is always the primary driver, almost always. But what I would say about sustainability is it elevates the conversation, to a CXO kind of level. So whereas for the, in some cases we see consumers who actually don't have a very power intensive business. So the volume of power that they're looking at transacting is not very large. The financial impact may not be worthy of sort of attention at the board level or at the CEO or CFO level. But what we see about sustainability is that because the commitments to sustainability are made at a very high level, it allows those decisions to get elevated to very senior levels in the organization. And I think group captive is a good example of this, because if you look at the at the savings involved, in many cases, I think large corporates would say, look, for a savings of $100,000 US a year, am I really going to take investment into another entity and sort of, get board approval and so on? And for the financial savings alone, they may not do that. But if it is the only option they have in which to move the majority of the power consumption over to renewables, and it also happens to be cost saving, then it's the sustainability aspect of it which allows it to kind of clear those internal hurdles and kind of get momentum within the organization. So, so I would say economics is primary, but sustainability is not, it's not negligible, and it really helps to kind of ease the decision-making and kind of get buy-in from senior levels in the organization.
Yeah. So I have a question from Santosh, who's asking if you have any guidance on what the market size for open access PPAs is going to be like in the next 5 years. Is there some internal guidance which you can share on what you're thinking the market size is going to be like over the next 5 years or so?
I'd be reluctant to give any firm numbers that could come back to bite me. But like I said, I think the underlying trend is very favorable and the demand is there. I think what can make the market size pretty variable is the extent to which states allow the transactions to happen. Because there's quite a lot which state governments as well as regulators, there's quite a lot they can do to kind of encourage or discourage transactions to happen. There's quite a lot of uncertainty there. What I can say as a developer is that the way we look at it is most of those uncertainties are state specific. And so in the aggregate, we believe that there will be enough states which encourage these projects to happen, that there will be a good market for it, even if some states don't, if they react in a negative way to these projects, because the risk is spread out across multiple states. For us, we believe that enough states will move forward that there should continue to be growth.
Yeah. Now, just taking that from a perspective of a corporate customer who probably has their facilities in select states in India, which are those states where if a corporate customer has a facility, they should be looking to deploy open access PPAs to procure renewable power? If you can, especially for
Yeah.
2019 and maybe 2020, where do we have favorable policy? Where do we have favorable tariffs? Name three or four states where you think if a corporate customer who is on this webinar is thinking of procuring renewable power would be a good state
Right.
go ahead and start the discussion on.
Sure. So actually, the slide which is showing here, all the states which have this green icon showing are all states where group captive regulations uh, are reasonably favorable and where the economics are also favorable for industrial as well as commercial customers. So Tamil Nadu, Andhra Pradesh, Karnataka, Haryana, UP. I think Maharashtra and Gujarat, there's still some regulatory uncertainty. So I would be a little bit less enthusiastic in suggesting those states, but the others here I think are all good places to look at. And I would say also that it makes sense because rooftop is a good option anywhere. With most of our customers, for just about every facility they have in the country, we're able to find some solution or the other, whether it's rooftop, group captive, or some combination of the two.
Yeah, I think that's a good segue for us to move to the second presentation by Dipjay from CLP, who will be covering policy and regulatory aspects and what has changed there. And I think a lot of questions in the chat also are covering those points on policies and regulations. So we'll take up those questions after Dipjay has finished his presentation. So Dipjay, if you want to just unmute yourself, I'll pass on the control to you.
Sure, thanks. Can you hear me, Jasmeet?
Yeah.
Okay, thank you so much, WBCSD, and thank you, Jasmeet, for setting this up and giving me an opportunity to speak. I can see a lot of familiar names in this attendee, so it's always a wonderful time to kind of reach out to them and share my views, and also get the questions. That gives you a more of a market sense how the consumers are looking at what are their anxiety uh, points. And it's always difficult to follow Andrew. It's especially when he sets out such a wonderful foundation. Andrew, excellent set of numbers and trends that you I think it shared us. Uh, uh, what I'll do is I'll take a lead from what Andrew has set as a foundation, and now I think he has covered to a large extent on the rooftop and also given an overview of what are the structures in the market. I'm going to talk about first of all what regulatory provisions are existing in India, and then I'll also deep dive into the structures, how energy accounting happens. I'll try and correlate that with some of the international terminology that is prevailing in corporate PPA sourcing, so that our colleagues from abroad understand what are we talking about in terms of their language, and then have a quick glance through what has happened in 18 and 19. What are the major regulatory changes that Jasmeet has said? We'll touch upon that, and then that's how probably we'll conclude the session, and then look forward for your questions at the end. Okay, so moving on. So what I've done is I've picked up this table, this chart from our last year's report, corporate accelerating corporate PPAs in RE sourcing in India, and the green box is something which I'll be covering in this presentation, which is mainly talking about offsite physical PPAs, wherein a consumer can buy energy from offsite wind and solar, or for that matter, even in a conventional power plant. What kind of structure that exists, that is, and what regulations are, kind of setting up this ground. Moving on. So Electricity Act 2003 was, I think, the landmark reform in electricity sector of India, and that has provided open access rights, open access framework, which allows a consumer which has a more than 1 megawatt of demand to choose their choice of supplier, and similarly a large size generator can also choose their choice of consumer. So the word open access basically tells that you can use existing network of the utility by paying certain charges and then wheel power from your generating point to consumer point. Now, using that as a primary framework, there are two modes of transaction that a PPA can be structured. I think Andrew has touched upon these 2 points, whereas one is a captive PPA, or also when a group of companies are investing into a project, it becomes a group captive PPA project, and the other one is a third party. In captive, consumer is required to have at least 26% ownership in the generating asset, and 51% of corresponding capacity has to be consumed by them. This is a mandatory requirement for the to qualify a captive transaction. And when you are having this investment and you structured your PPA as a captive PPA, you can avail certain waiver of open access charges, which is mainly the cross subsidy surcharge and additional surcharge. So uh, overall transaction cost of sourcing power goes down compared to third party transaction. And a third party is a contrast to captive, wherein you don't need to invest into a generating asset, and hence it's comparatively simple structure. You don't need to, take a board approval, and share transfer and shareholders agreements are not required. Just a simple one PPA contract that executed by two parties at arm's length, and but as I said earlier, you need to pay full open access charges, so it results into slightly higher open access costs. Moving on to the next slide. So if you see the first, so these are the set of open access charges. Uh, and what I tried done in this slide is to explain the rationale for from where these charges are coming, because a lot of people still believe the open access charges are very irrational, and it can make or break the market, which to an extent is true, but there's a method in that madness. And uh, so if you understand each of this element, then it will be easier for you to understand the risk of regulatory changes, and hence you can structure your transaction properly. So this slide covers the total, all, I think broadly all the charges that are applicable for an open access transaction. So transmission and charges and transmission losses are the charges that you pay to the transmission utility. So typically 66 kV and above to wheel power from your generating station to the nearest distribution voltage level. Losses are generally paid in adjusted in kind, so that you inject 100 unit and the losses, transmission losses, let's say is 2%, then 98 unit gets credited at your distribution point, and from there there'll be another loss adjustment of wheeling losses, which is mentioned as a fourth point. So in a way, transmission charges and transmission losses are similar to wheeling charges and wheeling losses. Only thing is it is applied by two different entities. Transmission charges and losses are applied by transmission utility, while wheeling charges and wheeling losses are applied by distribution utility. Cross subsidy surcharge is a unique element in India, where because CNI segment, the commercial and industrial segment, is a high tariff bracket, and uh, the tariffs are decided in a way that part of that tariff is used for cross subsidizing the socially and economically backward, or I would say prioritized sector, such as agriculture and households. So when a high-paying consumers like CNI consumer go or no, off the grid, the utility loses that component, and hence to ensure there's no impact on their economics, they recover the cross subsidy surcharge from the open access consumer. Additional surcharge is calculated based on stranded assets that get created as a industrial or commercial unit moves from utility to open access structure, mainly because still most utilities do have a significantly large portion of their procurement based on fixed plus a variable tariff PPA, wherein no matter whether they're drawing enough power from their, so utility is drawing enough power from their generator, they need to keep paying the fixed component of those generation station. Hence, hence this utility is also in a way passing on this additional cost that is arising out because of the migration from utility to open access. And then there are also miscellaneous charges like you pay a one-time fee when you seek an open access. Either it can be a medium-term open access, short-term, or a long-term open access. And there are scheduling and system operating charges, and at times you also have meter reading charges and stuff like that. Moving on. So now we'll jump into how the energy accounting happens. The reason I kept these two slides are to kind of take you through exactly what happens in the energy in the corporate PPA. Unlike the virtual PPAs, which is prevalent in US, or geo-based PPA, which is also prevalent in Europe. Here in India, it's mainly the physical PPA that exists. So there is a crediting mechanism, there's a withdrawal, and there's also a concept of banking for renewable energy, which is now actually dying or getting more and more stringent. So what happens is when you inject, so at your at a generation station, at a solar or wind farm, the meter records injected energy, nowadays often on a 15-minute block basis. That energy gets adjusted to the transmission losses, which I mentioned in the earlier slide, then wheeling losses. So these are, after adjusting these two losses, you get the net energy that gets credited at consumer bus bar from the generation bus bar. And in terms of using this credit in their consumers' electricity billing, consumers generation is also recorded at a 15-minute basis, or a different time of day basis, depend on which state the consumer is located, and their consumption and generation is matched. If the consumption is higher than the credit that you receive from the open access supplier, then whatever is a surplus that you consumed will be billed at utility tariff applicable to consumer. And as I mentioned, the time block for this energy settlement varies from state to state. There are states like Maharashtra and Gujarat which ask for 15-minute settlement. There are states like Tamil Nadu which has a couple of hours of time of day, peak and non-peak kind of blocks. Banking is more of an promotional feature that was provided to renewable energy when they wanted to promote captive and third-party PPAs in, or I would say, open access transaction in the state. Because of informed nature of renewable energy, you will always, it's difficult for you to generate exactly the same quantum of energy which is needed for a consumer. So you will generate, and there's a mismatch between generation and consumption. So in case of surplus of energy, that gets credited in consumer's account or a supplier's account, depends on the state regulation. And then in a subsequent month, when there is a shortfall in generation compared to the consumption, this surplus energy which was credited in your energy bank gets adjusted again, this shortfall, and hence you kind of use it in a subsequent month or during the financial year. I'll explain you each of this element through an illustration, which is in the next slide. So this illustration covers, covers like a typical transaction. For example, we have one wind generator supplying to a consumer using an open access network. Let's say generation happened at 100 unit. There was a 10% of transmission losses and wheeling losses, which is 10 units of reduction, resulted into 90 units get delivered at withdrawal meter. However, against that 90 unit, consumers' consumption was 120 units. So 90 units will be billed by open access generator to the consumer. So for that, let's say an example is CLP. CLP is supplying to, let's say, ABC Limited. Then we will be billing ABC Limited for 90 units, and remaining 30 unit which they have drawn from the utility, they will be utility will be billing the consumer for this 30 unit. Utilities open access charges like wheeling charges and transmission charges will also appear in the consumer's electricity invoice. In the next line, if you see 120 units were generated and 10% of the network charge got adjusted. So you, sorry, Jasmeet, can you go back to the previous slide, please? Yeah. So you have 108 units of energy available at your withdrawal meter, but consumption was lower. So in this case, you have 8 units of surplus, which gets banked. So this is what I was talking about when I was referring the banking unit. And this 8 unit of surplus is getting adjusted later on when again, the delivered units are lower than the consumed unit, which is mentioned the last line of 100 unit minus 10, and then consumption was 105 unit in that line. Okay, moving on. So this slide, I think, summarizes the broad structure or 3 options that you have apart from rooftop, which Andrew has already covered. So third party and captive PPA. So typically, third-party PPA are comparatively shorter than the captive, mainly because it does not involve cross holding of equity, and hence it's easier for a company to kind of exit and also find a new buyer. Unless the states like Karnataka till recently, till last year, where there were clear policy incentives available for 10 years. So those are the, when you have such kind of policy, such policy exists, it is easier for you to also have longer lock-in third-party PPA. Otherwise, it's generally shorter. There is also an option for a consumer to source power from the exchange. I mentioned only day ahead. Sorry about that. There is also a term ahead and week ahead contract available. So you can buy up to few days or in advance for your, your consumption need. So on third party, as I mentioned earlier, you need to pay all the open access charges. In captive, you have benefit for the waiver of additional surcharge and cross subsidy surcharge. Exchange is similar to a third party transaction, so you pay full charges there. There are certain states who that provides no, I would say discounted discounts on the transmission and wheeling charges for renewable energy. So if you're sourcing wind or solar power, instead of 100% of transmission and wheeling charges, you pay only 25% or 50% of the charges. While in exchange, it's not a green power, so it's always a brown power that you get, and hence you pay full charges there. In terms of flexibility of contract, third party is easy to customize. Exchange is it's standard contracts, so you can't customize it, but you can customize your buying behavior. So you can place an order for every 15 minutes, and that's how you can customize it. Captive PPA, because of it's slightly difficult to customize. I mean, comparatively compared to third party, it's difficult to customize, mainly because of its requirement for 51% of consumption and also slightly longer tenure that a generator expects customer to lock in. Moving on. Yeah, so in this slide, I've summarized the developments, key developments in 18 and 19 on regulatory side. Uh, so, I mean, I would say 18-19 is a mixed year on open access. Um, there are, I would say, medium to long term forward-looking progressive amendments or proposals being announced by central government, and at the same time, we had some of the challenging announcement from the state, wherein or I would say their utilities started uh, facing hit of the open access transaction, and hence losing the high-paying consumers. So some of the examples like Electricity Act Amendment 2018 were announced, and it has really interesting feature which are proposed, including like open access rules will be standardized and it will be set by central government. There'll be ceiling on cross subsidy surcharge and additional surcharge, and there'll be commitment to reduce uh, this charges over a period of time. Um, it is also talking about bringing more competition in the market. So monopoly of distribution company in a way is at risk, and hence it will be easier for consumer to source power from the market. Uh, uh, Similarly, if you look at the national tariff policy announcement, they are also talking about simplifying the tariff structure. Right now, if you see same process or same technology industry is classified in a different tariff bracket, different across different states. Hence, if you are an energy manager for a consumer, it's very challenging for you to kind of manage your energy accounts and also structure your transaction. When you have a standardized tariff brackets and class categories across India, it'll be easier for you to manage your portfolio, especially when you have facilities spread across multiple states. And electricity, the CERC, which is Central Electricity Authority, has also published a paper on market-based economic dispatch, which is talking about redesigning of day-ahead market, and kind of similar to what Europe is right now doing, where all the power gets cleared at exchange on based on their economic attractiveness, and then and technical constraint, and then uh, based on that, like you utilize the efficiency available across the state. At the same time, as I said, there are a couple of challenging development. Like some of the states have either discontinued or did not renew their did not renew the attractive policies that existed for solar or open access, like Karnataka and AP. And there are certain states which have, I would say, reversed their or made amendments in their policy. In Haryana, for example, when they announced waiver of all the charges for a period of 10 years, and then later on, recently, they're now talking about limiting this waiver only to the captive transaction rather than third-party transaction. There's also a trend which is visible across the state, wherein they are either uh, either they are kind of taking away the banking benefit, or they are restricting banking on a 15-minute on a few months basis. So in a way, I would also see this as a positive development for a renewable in the long run, because if renewable has to become a mainstream, it has to behave like a disciplined player. It has to take care of its volatility, and these are also signs of market becoming mature, uh, and hopefully volumes will grow in a short time. That's it from my side. I think a couple of high-level message, if I have to summarize, is no regulatory risk or change in regulatory is always a prime or one of the most important risks that exist in India for corporate PPA. So it's very important for you to scan the market, understand the regulatory trend in that particular state where you have a facility and planning, and based on that, you can decide whether you are is it good to go for a rooftop within and open access or a third party transaction.
Thank you, Dibjay. We'll take a few questions. We just have 4 minutes till our hard stop. Uh, so first question, I think the last part which you were covering in your updates was probably the most interesting, wherein you said that even though some of these charge waivers are being taken away, it's still seen as a positive because it brings more certainty, perhaps. Maybe if you want to just elaborate on that, uh, just give a little bit of sense how how we should consider that as a positive for the market.
So yeah, what I was trying to say is it's see, if right now, if you look at in terms of energy, India is, I think, only 8% of our few energy mixes from RE in terms of kWh. And if you look at the neutral party's view, where, or I would say the grid operator's view, wherein they have to manage this volatility, to an extent, we can understand that pain if we are injecting lots and lots of wind in the evenings of monsoon, and we want that to be credited against my consumption or my consumer's consumption in the, let's say, month of a summer month where the wind is low and the demand is very high. So it's difficult for them to manage the network from a technical perspective, and also there are strains in terms of the commercials. So when you talk about some of the waivers going off, but there's a clear trend that it is becoming tighter and tighter. It is easier for, or I would say, it is time for the generator to start adopting to this trend and start building or start building capacity and transaction around it. We also seen consumers understanding this, and hence I think Andrew also mentioned that no earlier there was reluctant to get into captive transaction, but now there are so consumer is reasonably aware that, hey, if I'm really committed to RE and I want to source RE, then I probably don't have much of the option but to go for the captive.
Okay, I think we have a couple of questions from Shailesh from CDP. So he's asking us, is there any long-term visibility on open access charges? And if there is, or if there isn't, then what kind of variations do we really see? And are they really such a big concern that you would probably go into negative, which I think Andrew also mentioned that you probably wouldn't. It would just mean probably that from a 30% saving, you go down to 20% saving if there's a fluctuation on the negative side. But just kind of taking us through what the visibility is around open access charges and how much do they really vary, and is there a method to the madness, like you put it? The second question he asks is on the REC mechanism. Is there a future for REC mechanism in India? What's happening there? And can that be brought on track from where we are today? And the third question he asks, and maybe both Andrew and Dibjay can have a look at this, is on the reporting side of it. So a lot of companies who are focused on renewable energy adoption from a sustainability perspective would like to report what they're doing. So is the reporting mechanism clear? Is that in line with global best practices, or is there something that needs to be done for reporting as well? So maybe Dibjay, you can go first on both REC mechanism and certainty in long term on open access charges, and how much of method to madness exists or doesn't exist. And maybe Andrew, you can take the question on reporting and if what we are doing in India from a reporting perspective is aligned to global best practices. Dibjay, you
Yeah,
first.
thanks, Shailesh, for the question. It's really interesting one. So if you look at, I mean, if you're asking me to give a document saying that no, yeah, is there a visibility? Answer is no. In for the most states where, except Haryana, I think as of now, where you have visibility on open access, which is mainly because the waiver is available. It does not actually say like, no, this is how your charges will move. So the answer is no for that. But if you understand as I said in my one of the slide, where let's understand what are the open access charges and how it is coming from. So there are broadly two types of charges. One is the set of charts.
If you can just kind of quickly give the answer in a probably a yes or
Sure.
no, because we are out of time, so we need to close.
Fine. So, okay. So just a crisp answer is, I mean, it's difficult. It's not possible to, as of now, in current situation, to predict open access charges, or visibility is not available. Transmission and wheeling losses, to an extent, I would say we are almost at a cap, and it is declining to an extent. Or even if you have you assume it to be a flat, it's a fairly good judgment. Cross subsidy and additional charges, I think nobody will be able to take a call. On REC market, I'm not an expert to talk about it, so I would avoid this question. Thanks.
Andrew, and last words on reporting of what's being generated, and does that match global practices, or is there anything we need to do there?
Reporting, we mean at a government level, or we're talking about it?
Just from a corporate reporting perspective, in terms of generation and how they're reporting their renewable procurement, etc., to shareholders and others.
Yeah, see, hard to give a general answer because I think every corporate is doing it individually. I do think, I mean, the MNCs, which are, for example, RE100 signatories who are kind of driving this out of the head office, in my experience, I've been looking at this quite closely and really understand very well how to do their carbon accounting and their renewable energy accounting. So I've seen quite a few people doing it very well. I'm sure that won't be the case across the board, but yeah, again, it's hard to give a general answer to that.
Yeah. Okay.
Yeah.
So I think we'll close here. We have a few more questions we were not able to take. Maybe you want to take them directly to the speakers. I think most of you know the speakers anyway. So let me thank everyone who attended, and especially thank our speakers, Andrew and Dibjay, for sharing all the insights that they did today. We've just to kind of reiterate this. We'll use this information to come out with a white paper next month, and this will be available to everyone through that white paper, and we plan to do these updates biannually going from here. So that's an update from our side at WBCSD. Again, thank you everyone for joining, and goodbye.